Hi, this is Lara at Elliott Wave Gold with an extra video update for you for silver analysis after market closed for the New York session, Thursday the 26th of January. I'm expecting now that a deep correction's begun for silver. The target is 16.26 and to not move below 15.638. Let's have a look at the Elliott wave count first, classic technical analysis next. Both my weekly Elliott wave counts see a 5-wave structure complete from the all-time high down to this low in December 2015 here, a 5 down for cycle wave A, and now cycle wave B is underway. This first weekly wave count sees cycle wave B unfolding as a double zigzag. B waves can be any corrective structure and there are more than 23 possible structures. So we have to be flexible with B waves and consider multiple options. From this low to this high, if we see a 3-wave zigzag complete up here, then minor wave 4 is a rare running flat correction. So that reduces the probability of this first count, which means the second weekly chart actually has a higher probability. If we accept a running flat here, then from this low to this high, we can see a zigzag complete. That could be the first zigzag and a double zigzag for cycle wave B. The double is joined by a 3 in the opposite direction labelled X, which subdivides as a double zigzag, while W, Y, and, if there is one, Z waves can only subdivide as simple A, B, C corrections, or, in the case of triangles, A, B, C, D, E, they cannot subdivide as multiples. Because the maximum number of corrective structures within a multiple is 3, that maximum applies to W, Y, and Z. To label multiples within multiples increases that maximum beyond 3, violating the Elliott wave rule. However, X waves are not included in that total of 3. They are joining structures. They can be any corrective structure, including multiples. And so this wave count does still meet all Elliott wave rules, but a word of caution. There's a lot of stuff out there on the internet claiming to be Elliott wave, which labels a lot of movement W, X, Y, X, Z, and within W, Y, and Z, those are also labelled W, X, Y, X, Z. If you ever see any such labelling, it violates an Elliott wave rule. It's not following the rules. It probably won't have any predictive quality at all. You should not waste your time. You should avoid it. That would be my biggest guideline to looking at new Elliott wave work on the internet. If this wave count's correct, then X is likely over here and Y would be underway. It'll reach equality in length with W at 23.131. I'll be using this trend line as well, drawn across these lows, extended on out, found resistance here. It might provide resistance for primary wave Y as well. Let's have a look at this second idea, where cycle wave A is still a 5 complete down here, and now from this low to this high we're looking at it as a 5-wave structure. Sometimes it's impossible to tell if a movement is a 3-wave zigzag or a 5-wave impulse, and when that's the case, which is often the case, then it's important to consider both possibilities. If this is a 5, then we could have 1, 2, 3, 4 and an extended 5th wave ending with a very strong upward movement. It's common for commodities to exhibit extended 5th waves, so this would follow the most common behaviour for a commodity, so that slightly increases the probability of this wave count. We've avoided now a running flat in this position down here, so again, this wave count has a higher probability than the other. I need to move my label from 1 or 2 from this low to this low. It's incorrectly labelled there. Now from this high to this low, we're seeing a double zigzag complete for minor wave B, and so with a 5 up and a 3 down, I'm seeing cycle wave B now as a single zigzag. The target is exactly the same. Primary C will reach equality in length with primary A at exactly the same price point, and I'll be using the trend line in exactly the same way. So at this stage, whether we see this upward movement as a 3, a zigzag, or a 5, an impulse, it makes no difference to the expected target and direction for the next movement up, but it does make a difference for how I expect this next wave up to subdivide. The first wave count expects it to be primary Y, which would be a zigzag, and this wave count expects it to be primary C, which should be a 5-wave structure, either an impulse or an ending diagonal, and most likely an impulse. Let's have a look at the daily chart where this low for primary B or X is this point down here, and so this will suffice for both weekly wave counts. This is the same best fit channel that I've drawn on the weekly chart, so I've drawn it from actually, let's just quickly go back to the last weekly chart, because this channel is really important. I've drawn it from this low along to this low here, and then I've placed a parallel copy up on this high. Now let's have a look at how that fits at the daily chart level. Both weekly and daily charts are on a semi-log scale. We've got a really small overshoot here, but apart from that, up to this point in time, while price has been overall moving lower, price is finding good strong resistance at the upper edge of this channel. At this stage, with price moving down and away, I will be expecting the upper edge of that channel to continue to provide resistance. From this low to this high, I can see this is quite a neat 5-wave impulse, subdividing 1 2 1 2 1 2, and then 3 4 3 4 3 4 with a final 5th wave. I expect my new 4 in here fits as a combination of a triangle at the hourly chart level. If that's correct, and we've got a 5 up complete here, then we'd be looking at a 3-wave structure to the downside, which can't move beyond the start of the 5 below 15.638. The most likely place, if this is a second wave, for it to end would be the 0.618 Fibonacci ratio, about 16.26. And along the way down, I would expect corrections to continue to find strong resistance at the upper edge of this channel. Okay, let's have a look at some classic analysis starting at the weekly chart level and see if those Elliott wave counts, which are both expecting a pullback, are supported or not. At the weekly chart level, the first 3 weeks of upward movement saw an increase in volume to support the rise in price. The very last week saw a slight decline in volume, so in the last week there was some weakness. All of these weeks have long upper wicks, and this last week has a smaller real body and a long upper wick, so that's a little bit bearish. Now we've got what looks like, although it's not complete, we need one more day for Friday to complete this week, but it so far looks like we're going to see a red weekly candlestick. On balance volume at the end of last week found strong resistance at this trend line drawn across here to here and extended it on out. This is a fairly conservatively drawn trend line. If that holds, then this week may move on balance volume down and away, and if that's correct, then the trend line would be correctly drawn and it would have provided resistance that would offer some support for the Elliott wave count, which expects a reasonable pullback here from silver. RSI is pretty much neutral. There's no divergence at the highs at the weekly chart level from price and RSI to indicate any weakness. It's below 50, so it's in bearish territory, but it's rising along with price. Let's have a look at the daily chart for silver. Overall, as price rose to the high here, overall it came on an increase in volume. These last 2 days see an increase in volume for 2 downward days in a row. And so the fall in price for this very last session here has some support from volume. That's important. That means I would expect at least one more red daily candlestick to follow it. ADX is declining, telling us the market is not currently trending after reaching extreme. It reached above both directional lines. It didn't get above 35 though. That would be more extreme. It's declining as price is moving up, and now we may have a trend change from up to down with a cross of the positive and negative DX lines. But before we can assume that that's telling us there's been a trend change, we need to see the black ADX line increase and the negative DX line to remain above the positive, and then it would be indicating a trend change. So I'll be watching that one over the next week carefully. As price has been moving higher, ATR has been overall declining. Now this is normal for one of 2 situations, and this works for both gold and silver. During a counter trend movement like this one and this one, we can see declining ATR during counter trend movements, but it also happens during the start, the first wave of a new trend for both of these markets. The first waves can be rather weak. The third wave shows some strength, and the 5th wave is the strongest of all, very typical for commodities. And so it's impossible with this declining ATR to tell which of those 2 scenarios is current for silver and for gold. Is this a counter trend movement, choppy and overlapping, like this one and this one, or is it the start of a new trend, as the Elliott wave count expects? On balance volume at the daily chart level is providing resistance and support. This may offer some support. We may see a bounce up from there, but I haven't drawn the resistance trend line here on my stock charts data, use the daily Elliott wave count. For that, I will expect that to provide very strong resistance. If on-balance volume breaks below this yellow line, that would be a weak bearish signal, only weak because the line's only been tested twice before, it's not too long held, and it's got a bit of a slope. RSI is approaching neutral. It didn't exhibit any divergence at highs between price and RSI to indicate any weakness, but stochastics was overbought and did exhibit divergence with price at the last highs, and now it may be returning from overbought. So overall, this analysis has some support for the Elliott wave count. It's not very strong support, but it's enough for me to expect that it's very likely that at this stage price is going to move lower for silver, finding resistance at that line, and overall move lower at least for the next week, if not several weeks, for a deep pullback. That's all from me with an extra video update for silver, and if you want to find daily analysis, Elliott wave and classic technical analysis of gold with weekly analysis of oil and silver, you'll find it in the membership area of Elliott Wave Gold.